today's world, it is important to know the company's performance by analyzing a company's financial position through ratio analysis. Genting Plantation Berhad and FGV Holding Berhad are both prominent Malaysian companies involved in the palm oil industry. How is their company performing, and which company performs the best and the worst? Genting Plantation Berhad was incorporated as a private limited company on 29 September 1977. Founded by the late Tan Sri Lim Koh Tong, it commenced operation in 1980 as the plantation arm of the Genting Group. In 1982, it gained a listing on Bursa Malaysia. Genting Plantation has successfully transformed itself from a modest, predominantly rubber-based enterprise into one of the region's leading oil palm plantation groups and spread over Malaysia and Indonesia. Genting Plantation core business sector is oil palm plantation, property development, and oil mills. FGV Holding Berhad was established in 2007, serves as the commercial arm of the Federal Land Development Authority known as FELDA. It was established to drive the transformation of the FELDA Group into an integrated multinational corporation with strong focus on the agribusiness sector. Over the years, FGV has become one of the world's largest producer of crude palm oil, accounting for 3% of global and 40% of Malaysian CPO production. Since its listing on the main market of Bursa Malaysia Securities Berhad in 2012, FGV has remained committed to achieve its strategic goals. Their core business sector is plantation, sugar, integrated farming, logistics and support business.
Assalamualaikum and hi, my name is Wahidah with the Adwani. Today, I'm going to explain the trend analysis of Genting Plantation Berhad for the past 5 years from year 2018 to 2022. Firstly, we'll look into Genting Plantation Berhad liquidity ratios. The first ratio is net working capital. From year 2018 to 2020, Genting Plantation Berhad net working capital increasing with time. It shows that the company has more excess funds, which means liquid access available after paying daily operation, obligation or current debts. On the other hand, the net working capital from 2021 to 2022 is decreasing. It shows that Genting Plantation Berhad has enough capital to cover their short-term expenses. Next, let's take a look at the current ratio of GPV. The data show that GPV has higher current ratio in 2020 because it has better ability to cover its short-term liabilities with liquid money than in 2022. In the last 3 years, GPV current ratio was above 1, indicating that the company's short-term debt level was relatively low and its finances were stable. As we can see, from 2018 to 2020, GPV quick ratio increased, meaning it has the highest ability to pay short-term obligations without relying on the least liquid asset. However, its quick ratio decreased from year 2021 to 2022. Yet, it remains good quick ratio because it is more than 1 times. Next, we will look into the activity ratio of GPV. First of all, account receivable turnover. In the last 3 years, the account receivable turnover of GPV has increased. It shows that it has better ability to collect debts or credit sales from customers. After that, average collection period. GPV has a good ability to collect debts or credit sales from time to time due to its low average collection period from 2019 to 2022. On the other hand, GPV average payment period will fluctuate. According to the data, GPV has longer average days to pay credit purchases to supplier than in other years. Next, the data revealed that inventory turnover of Genting Plantation Berhad increased from 2018 to 2021. Meanwhile, decreased in 2022. Given that, it means that GPV has strong sales in 2021. Genting Plantation Berhad demonstrated good performance in fixed asset turnover, which increased year after year from 2018 to 2022. It indicates that management makes better use of its fixed assets. Furthermore, the data indicate the total asset turnover grew from 2018 to 2022. It implies that GPV used their asset effectively to break sales year after year.
Hi, my name is Iylia Bahari. I will continue explaining the trend analysis of company GPV regarding debt ratios and profitability ratios. Next, let's take a look into the leverage or debt ratios of GPV. Regarding the debt ratio, the data show that the debt ratio decreased from 2018 to 2019 and again from 2020 to 2021. It reveals that GPV has a lower ratio, indicating that the company has less debt to finance these assets. In addition, it is shown in this figure that between 2018 and 2022, GPV's debt to equity ratio fluctuated. The data show that in 2021, GPV has a lower amount of debt being utilized relative to the capital provided by the company's owners. After that, GPV's analysis of time interest earned from 2018 to 2022. As can be seen, the period keeps increasing each year. It means that the GPV is able to pay or serve its financial interest expenses applied on the debt used. Profitability ratio. The data show that GPV has a higher income generated from sales in 2022, 31.18%, while the lowest income generated from sales is in 2019, 18.48%. Other than that, net profit margin. From 2018 to 2019, the Plantation Berhad's net profit margin was trending downward. However, in 2020 to 2022, as the company's profit increased, the net profit margin was improved as well. Aside from that, the operating profit margin of GPV increased significantly in 2021 from 15.30% to 24.03%. It shows that the company generates a higher profit from sales after deducting administration expenses, but before deducting interest and tax in 2021. Other than that, return on assets is the best profitability ratio. GPV's return on assets has risen and fallen in recent years. The data show that in 2021, GPV had the superior ability and effectiveness to use its total assets in 20 units profits 9.10% than in 2019, which was 2.93%. Lastly, return on equity. We can see from the data that GPV was decreasing from 2019 to 2022, which means the company was making more money and improving accordingly. In 2022, the company has a greater ability and effectiveness to use its entire equity in generating net profits as well as generating net profits for its shareholders, which is 9.67%. That's all the explanation regarding the trend analysis. Let's move on to the comparative study between Genting Plantation Berhad and FGV Holdings Berhad for the year 2022.
Hi, my name is Atikah binti Jami'ai. Firstly, let's take a look at the comparisons of liquidity ratios between these two companies. Our net working capital, Genting Plantation Berhad has higher net working capital, so it has more excess funds, liquid assets, available after paying its daily operating obligations or current debts than FGV Holdings Berhad. This is because the higher the net working capital, the better or more liquid the company is. Next, the current ratio. Both companies have a good current ratio. However, Genting Plantation Berhad has a higher current ratio, so it has a better ability to pay its short-term liabilities. For example, short-term loans and account payables, using its liquid funds than FGV Holdings Berhad due to the fact that the higher the credit ratio, the better or more liquid the company is. Other than that, GPV has a good quick ratio as it more than 1 times. However, FGV Holdings Berhad has a bad quick ratio as it is below 1. As we can see, in the 2022 liquidity ratio, Genting Plantation Berhad is better than FGV Holdings Berhad in all elements. So, FGV Holdings Berhad can improve its liquidity ratio by boosting current asset or reducing current liabilities. The next comparison is the activity ratios. FGV Holdings Berhad has a higher account receivable turnover than GPV. Therefore, FGV Holdings Berhad has a better ability to collect debts or credit sales from customers. The data show that FGV Holdings Berhad has a lower average collecting period than GPV. Therefore, FGV Holdings Berhad has a better ability to collect debts or credit sales account receivables from customers within a shorter period of time. Furthermore, FGV Holdings Berhad has a higher average payment period than GPV. Therefore, FGV Holdings Berhad has more average days to pay credit purchase to suppliers because the longer the average payment period, the better as it reflects the availability of cash in the company. Following that is the inventory turnover. FGV Holdings Berhad has a higher inventory turnover than GPV. Therefore, FGV Holdings Berhad has a better ability to use inventory to generate sales. Likewise, FGV Holdings Berhad has a higher fixed asset turnover. Therefore, FGV Holdings Berhad has a better efficiency in using only fixed assets like plants, land, machinery, and buildings to produce goods or products for sales. Now, FGV Holdings Berhad has a higher total asset turnover than GPV. Therefore, FGV Holdings Berhad has better efficiency in using all resources or assets to generate sales. To summarize, FGV Holdings Berhad has better activity ratios than Genting Plantation Berhad. In this case, Genting Plantation Berhad should enhance inventory management and sales processes.
Now, let's look at the debt ratio. Genting Plantation Berhad has a lower debt ratio than FGV Holdings Berhad. Therefore, GPV has a lower percentage of total assets that are financed by debt. As you know, the higher the debt ratio, the higher is the company risk. Thus, the lower the debt ratio, the better. Moreover, Genting Plantation Berhad has a lower debt to equity ratio than FGV Holdings Berhad. Therefore, Genting Plantation Berhad has a lower amount of debt utilized related to the capital provided by the company's owner. FGV Holdings Berhad has higher time interest earned than Genting Plantation Berhad. Therefore, FGV Holdings Berhad has better ability to pay or serve its financial interest expenses applied on the debt used. This is because the higher the time interest earned, the better, as it indicates high company ability to pay the interest. For control, FGV Holdings Berhad has larger debt ratio than GPV, which is not beneficial to the organization. To lower the ratio, FGV Holdings Berhad should either reduce total liabilities or increase total assets. Last of all, the comparison of profitability ratios. Genting Plantation Berhad has higher gross profit margin than FGV Holdings Berhad. Therefore, Genting Plantation Berhad generates more income from sales before taking into account administration expenses than FGV Holdings Berhad. Next, Genting Plantation Berhad has a higher net profit margin than FGV Holdings Berhad. Therefore, Genting Plantation Berhad has a better net profit generated from sales after deducting administration expenses, interest expenses, and tax expenses than FGV Holdings Berhad. We can see that GPV has a higher operating profit margin than FGV Holdings Berhad. Therefore, GPV is better at generating profit from sale after deducting administration expenses, but before deducting interest and tax than FGV Holdings Berhad. Next, FGV Holdings Berhad has higher return on assets than Genting Plantation Berhad. Therefore, FGV Holdings Berhad has better ability and effectiveness to use its total assets to generate net profit than Genting Plantation Berhad. Also, FGV Holdings Berhad has higher return on equity than GPV. Therefore, FGV Holdings Berhad has better ability and effectiveness to use its total equity in generating net profits and also in generating net profit for its shareholders other than Genting Plantation Berhad. As a result, Genting Plantation Berhad has a better profitability ratio in terms of GPM, NPM, and OPM than FGV Holdings Berhad. Therefore, FGV can focus on increasing revenue while controlling costs to improve the GPM, NPM, and OPM ratio. While for ROA and RBP, FGV Holdings Berhad has better ratio. Hence, Genting Plantation Berhad can focus on increasing net income by boosting revenue and reducing expenses to improve ROA. Also, she will reduce the value of shareholders' equity to boost ROE.
What is the significance of calculating ratios? Firstly, by evaluating prior trends, it is possible to estimate the company's budget. It is also helps in analyzing how efficiently the company communicates significant information to accounting information users about business performance. Then, financial ratios are effective tools for forecasting a company's future performance. Companies can gain insight into various aspects of their operations through the analysis of historical financial data such as liquidity, profitability, and overall stability. Here are some key points about how financial ratios can influence a company's future performance. First of all, financial ratio analysis can be used by investors to analyze possible investment returns. They can assess whether the stock is undervalued or overvalued by calculating future ratios. Next, management of company use this forecast to make strategic decisions. For example, they may change production levels or debt financing based on predicted ratios. In conclusion, after conducting a comprehensive financial ratio analysis of these two companies, the following conclusions are drawn. Genting Plantation Berhad had a better financial ratio in 2022. Genting Plantation Berhad maintained a solid position in the plantation sector with consistent profitability and better control debt. However, FGV Holdings Berhad also demonstrated remarkable financial growth in 2002 by achieving its highest operating profit since its listing in Bursa. In addition, FGV Holdings Berhad managed to leverage its assets to generate revenues and cash efficiently. Hence, understanding financial ratios will enable and help investors, creditors, and management make related decisions. Therefore, Genting Plantation Berhad and FGV Holdings Berhad must balance their financial ratio metrics in order to sustain profitability by improving a few financial ratio metrics for each company.
That's all from us. Thank you.